3, 2, 1, 0. Ignition. Liftoff.
Good morning, good afternoon, and good evening, everyone. My name is Nik.
And I'm Yuri. Thanks for joining us again.
Recently in the news, Jack Dorsey had purchased $50 million worth of Bitcoin. Sounds like a lot. And well, it very much is. And as a result, Bitcoin price seemed to have rallied on the news. This brings us to one of the topics that we had discussed in one of our previous episodes, and that is the institutional interest in Bitcoin as a wealth preserving asset. I feel that Jack Dorsey is not going to be the last individual of high profile that is going to be releasing news similar to this. And when it comes to the impact on price, I believe it actually is going to be less and less impactful, for lack of a better word, on whether or not price follows suit. The thing is, in my opinion, I find that there is a disconnect currently between the market value of Bitcoin and the price discovery mechanisms which operate and the actual true intrinsic value of Bitcoin itself. I find that the companies that are currently investing into Bitcoin or converting parts of their treasury into Bitcoin are very much focused on the long term, on the wealth preservation side, and the way in which Bitcoin can help stabilize their treasury over the long term, rather than actually trying to speculate on it as an investment. I want to get into that a little bit later, but I want to hear your thoughts as well on what you think about Jack Dorsey's purchase.
Yeah, well, I think definitely it was a decision that came after the news from MicroStrategy, and I'm pretty sure that Michael Saylor from MicroStrategy pretty much set the trend, and that's the opinion that I see being circulated on Bitcoin Twitter, for example. Yeah, he with that single purchase of almost $500 million worth of Bitcoin, he tipped the scale in favor of Bitcoin in the eyes of those public company treasury managers, basically showing them that, hey, if I can do it, you can do it too. And we can clearly see that we're sitting on a huge block of ice called fiat money in our bank accounts. And, in the United States, maybe it's not melting as fast as in Europe with their negative interest rates, but it's still melting pretty fast. And we don't want to lose a few percent of our purchasing power every year simply by sitting on this cash, right? So yes, Bitcoin is volatile. It's a small market, but its performance in the past 11 years just shows that maybe if the Bitcoiners, those crazy guys on Twitter, are actually right, then this is the thing that may be able to preserve our purchasing power and also multiply it in the long term. So why not take a chance and actually do this bet? Because just as we know, the bet on Bitcoin is a bet of a lifetime, or it's a bet that's going to go to zero. So there's only two options here. It either goes to the moon or it goes to zero, right? So what Michael Saylor did essentially is he bet that it will go to the moon, right? And that set a very, very clear precedent, and all the other, all the other finance guys and the public company boards, I think, got his attention. They started discussing. There was a joke going on Twitter that Jack Dorsey suddenly had an emergency meeting at his company Square, and during that meeting they decided to invest some money in Bitcoin. There was, of course, a lot more criticism of that as well in with regards to the amount that he invested, because apparently Square makes about $90 million per month in revenue, and they invested only 50 million in Bitcoin, and they sit on a lot of cash. They make a lot of money. their business is very profitable. So, the comment that I posted on Twitter, what is it? An allocation for ants? You know, an allusion to Zoolander. But basically, we're just trolling, right? We're not. 50 million is a great allocation, but not a lot of people have that money. Not a lot of companies have that money, and allocating like 1% of your liquid cash into Bitcoin is already great. And if every public company did the same, we would definitely see some, we definitely would see a catalyst for bull run, right? So there will be no more Bitcoin. Just today, I saw a report that right now the sell side on the Bitcoin market is starting to get exhausted already. So we might see some kind of a jump in the price. We actually just saw one, just yesterday. So it's already over 11,000. Again, we're not in business of predicting the price of Bitcoin. Obviously, we're just speculating here. And to answer your question, I just think that Michael Saylor started the trend and Jack Dorsey enforced the trend, and now we can see more and more of these publicly traded companies thinking and acting on Bitcoin.
Yeah, and I think that it's going to provide a buying pressure, as you said, whether it's 1% of $1 billion, that's going in, or whether it's 1% of some other number. The fact is that these institutions, these large corporate players, are looking to Bitcoin as a means of wealth preservation, right? Even if it's a small bet, nonetheless. My biggest, I guess, maybe fear, concern, or uncertainty with the way that the market reacts as a result is the fact that, well, I, for myself, have been in the trading space, aware of how exchanges operate, both on the inside as well as on the outside, their incentive models. And I have grown to learn quite a fair bit about how these exchanges operate, how the entire price discovery mechanism of Bitcoin works. And while there is clearly an underlying buy side pressure, again, from these institutions, from individuals, that has been building over years, right, as a result of the fundamental aspects of what Bitcoin can provide, it doesn't seem to be reflected in price as evidently as it used to be. And what I mean by that is the mechanisms of price discovery are no longer as straightforward as they were originally, meaning that when there are a multitude of buyers coming into the space, the price isn't necessarily going to drive up right then and there. There's a lot of other dependent factors. So for example, when you're talking about an institution, coming in buying $50 million worth of Bitcoin, how are they going about doing this? Well, I'll tell you, they're not going to an exchange and putting in a market order, right? They're doing it at the very least through multiple exchanges, right, over a period of time. Because as we know, the Bitcoin market is relatively thin and it's easy to move the prices against us one way or the other. The more likely scenario is that they went with an OTC desk, which is able to source liquidity themselves from multiple sources and provide a slippage-free transaction for these types of sums. But this type of activity isn't readily reflected in the markets because there are also dark pools that exist, which are essentially conglomerates of individuals who trade within their own ecosystem, right, with a benchmark price that may be set from a traditional exchange, but the actual transfers in and out do not impact those prices, do not impact the prices on the outside, if you will. So you're able actually to get quite a sizable amount through those types of avenues before the Bitcoin price is affected. So essentially what I'm seeing here is the Bitcoin price has been predominantly dominated by speculation activity. And what I mean by that, it's not to say that everybody is just simply betting on Bitcoin. No, there is a large, and don't get me wrong, a large amount of individuals coming into Bitcoin for the intrinsic aspects that it provides in terms of wealth preservation, in terms of financial freedom, and everything that we've talked about. But those individuals are doing it in a way such that price is not impacted, because that is their entire paradigm. If you want to participate in the Bitcoin economy and you don't want to skew the price against you, right, because you want to buy at a stable value, you're going to search for other means. Whereas the speculators themselves, that's all the derivatives, this is the futures, this is the options, this is the synthetic swaps, this is everything under the sun that you could possibly imagine that exists today, that operates on the outside, meaning that it is the price discovery mechanism by which Bitcoin actually fixes a price. And this is way, way more, I think, affected by what's going on in the global economic environment, what's going on, for example, in the US elections, and what's going on in terms of the incentive models of the various institutions that are participating here in the various exchanges. What is their model? How do they make money? Do they make money from increasing and ramping up the trades on their platform, regardless of whether their individuals are losing money or not? Or are they incentivized to actually just bring in volume on one particular side, and many other reasons? But for this, I am seeing that there's a disconnect of the true price, if you will, of Bitcoin, which models like the stock to flow ratio tend to predict, and the actual market price and the market discovery mechanisms which exist out there today. Whether it's lagging or there's one ahead of the other, I don't care to speculate in that regard, but there's clearly a disconnect. And this disconnect is only continuing to get stronger and grow ever more larger as more institutions and speculators are starting to enter into this market discovery aspect, but also as more technology is starting to get built on top of the network, in particular what you have with all of these derivative instruments. Now, the counter argument there, of course, is that regulation is coming. It is here, and it will stifle most certainly a lot of the derivative exchanges from operating as freely as they used to. So we might actually be seeing a resurgence of spot price markets, becoming kind of the go-to areas where people start to trade. But we'll see how that evolves over time. For me, when it comes to Bitcoin price, hyper Bitcoinization, this is something that happens over years, right? This is not something that's going to happen next week, next month, right? It's the days of Bitcoin being a get-rich-quick vehicle are over. Okay, that's not to say that you're not going to get really good returns, more so than perhaps any other asset class on earth. But the days of investing $100 and walking out with $1 million is probably not going to be available for everybody in the space, which is why you see a lot of, as a side note, interest going into all of the shit coins and DeFi and everything else, because that's an area where you still can do those types of figures, but obviously with the substantially increased risk. To finish up on this, there is a disconnect clearly, in my opinion, again, between the market discovery mechanism of Bitcoin and the actual demand for what Bitcoin represents. And when we speak specifically towards the market discovery aspect, for me, and yeah, we're not on this channel to discuss what might happen with price, and yeah, there is a very weak sell side to the market, which is evident. The reality is that can change on a dime. A lot of the moves in Bitcoin right now that have been happening have been literally as a direct result of what's happening with the S&P, with the NASDAQ, with the FTSE, with all of the traditional markets that are currently going right now. And they are doped up on stimulus. Like literally the rally that we just saw over the last 48 hours, if you're watching this on the date of release, that would be October 8th or 7th. That was caused as a result of the speculation that there is going to be another 1-point-something odd crazy $1 trillion stimulus package. And the markets rallied and everybody was happy. The reality of the situation is that the US elections are coming. A stimulus package will need to literally be pushed through all of the courts that are required and passed within the next 2 weeks. That's very unlikely to happen. What's more likely to happen is that the election is going to come in, and then they're going to say, well, the stimulus, the actual release of the stimulus is going to be after the fact where the election is going to be settled. And if anybody has been following along with the news, there's clearly a lot of issues with how the voting is going to be happening and how the counting of the votes is going to be happening in the US election. So it's very possible that we will actually not have a result for the US election until maybe even next year, or if ever at all. There's a lot of really wild scenarios that could pop up as a result. But the reality of that is that the stimulus is not going to come anytime soon. And as soon as the market realizes that, there is going to be a sharp reaction. Whatever that reaction happens to be, Bitcoin is going to follow suit. And this is what I mean, right? For people like us, we don't care, or we understand the long-term value of the asset. We understand that it is a binary investment, and we understand the predominant, not only psychological, but economical factors behind investing in it. But the average person, they just see price, right? And price is no different than what is currently going on in traditional markets. It's very much speculative. It's very finicky. So the best thing that I advise to myself, to anybody else who's watching, is to do your research on why Bitcoin matters as an economical paradigm, first and foremost. Understand that and invest in that. Don't invest in the price. Don't care about the price. The price, believe me, will make you happy in the long run. But in the short term, you're just going to be really, again, at the mercy of the market forces, in my opinion.
Yeah, I completely agree, and I think you pretty much hit it on the nail. The vast majority of people will not delve into these details. They don't care about what's happening in the world, uh, only until it actually affects them directly, and then they will start thinking about these things. But most people just see the price, and it is up to us, I guess, the builders and people who build the infrastructure, people who buy a lot of Bitcoin and hold it for the long term to essentially create this market for the rest of the world, because it's, as Satoshi said, it's a self-fulfilling prophecy. The more people buy, the more the price goes. And right now, what matters is that we're still in the early stages of it, even though the price is all over $10,000. But we're still in the early stages, and the people who are coming to the market are still, pretty much a lot of the time smart money, or at least, if not smart, people who at least looked into why Bitcoin matters at all, right? The retail market is still has ways to grow by a lot, right? And we also hope to help with that. And But yes, definitely for the retail investor, the most important metric is the price, the value of Bitcoin. And I think this is how the majority of people will be attracted to it. But as the saying goes, I came here for the number go up, and I stayed here for the technology, right? So as they start, I think what people need to do is to get their Bitcoin just out of pure greed, just buy some Bitcoin because they believe it will go up. Okay. And then, uh, there will be a situation or two where they actually have to use it, send it to a friend or send it across the world to someone, or pay for some good or service that for some reason they cannot pay with a credit card or with cash, or whatever it may be. It may be a completely legitimate, good or service as well, right? And once they do that, I think something will click in their mind, and they will understand the actual potential of Bitcoin, why it was invented in the first place. Because they will just figure it out the way that, okay, well, this is what I just did with an application on my phone, that I didn't have to go to any bank. I didn't have to, fill out a form to get. Provide my ID to get anything. Like I just did it, right? And I can do it over and over again, actually. And people also can send this thing to me without any permission, right? I think it's very, very powerful, and that's why we have to work on in this direction. We just have to, in terms of the kind of a retail, the mass market, we have to just maybe focus more on its on the Bitcoin's growth as an asset that can not only preserve your wealth but also increase it. But for the other subset of population, which is much smaller, people, I would say people of action, people of more nuanced understanding of things, and yeah, you can explain to them the minutiae of how Bitcoin works under the hood, and why this is important, why the 21 million cap is important, why the 1 megabyte block size is important, things like that. You can explain all to them, and they will, I think, be more receptive of this information, but definitely not the rest of the people, which is completely fine, because such is the nature of the world is not even. The distribution of abilities and just the way people are is very uneven, right? There are people who are interested in some things, there are people who are not interested in some things. It's completely understandable. So yeah, I think we can definitely close on that, we will see a lot more institutional investment first. There will be more and more Michael Saylors and Jack Dorseys out there who will have something click in their mind, and they will just decide go full on Bitcoin, or at least partly in Bitcoin. Hedge fund managers and maybe even sovereign wealth funds as well, because there is already a sovereign wealth fund that owns Bitcoin in Europe. They have several hundred Bitcoins now. So these things will be increasing, and then the masses, they will follow. As we like to say, the masses will be forced on Bitcoin by economic reality rather than by it out of pure desire.
Yeah, absolutely. Couldn't have said it better myself. The world is changing, and this change is going to enforce a lot of aspects on people's lives, both financially as well as emotionally and physically. So everybody needs to prepare for that, plan ahead. And with that, we'll leave you with this message. My name is Nik, signing out.
And I'm Yuri. Thanks for joining us again. See you next time.